You were listening to chartingwealth.com for January the 18th, 2018. We have Chapter 7 of our book, Charting Wealth. We just finished writing it last week. We have it dictated and loaded up. We will be sending it out tonight with the emails for all of our daily chart reviews. If you're not a subscriber, go to chartingwealth.com, sign up. You will receive all the special trainings we have now. This chapter is on the king of oscillators, the price percent oscillator. And of course, on our charts, it is the dark blue line that we use. It is our main indicator, and it works like a charm time and time again. One thing we always look to do is Occam's razor. We want to work to keep things as simple as possible. As Einstein said, make things as simple as possible, not simpler. And we have tried to hone it down. You can get yourself into a confused state if you have way too many things to look at. Remember, all stock trading and investing is making a decision. Is the underlying equity security, whatever it is you're trading, even rice, because we use Japanese candlesticks, and those are originally developed by rice traders, is it going up or down? Now, there's a third question. Is it going sideways? But again, let's just stick with the binary decision. Is it going up or down? That's all we're really doing. And isn't it amazing how hard it is? And people will over and over again confuse themselves by making the decision too hard. The beautiful thing is you make a decision, you go with it. If it doesn't work, you pull the plug on it and you wait for the next time that you can jump into a trade. And invariably, if you practice this, my friends, and you do what we say, that is fill out the daily market worksheets every day, the weekly market worksheet once a week over the weekend, and you do practice trades all the time that they are available, and you document all this with your daily market worksheet, weekly market worksheet, and trade worksheet, you will be amazed at how good you will get at doing this. But if you just listen to the sound of my voice occasionally fill out a daily market worksheet, never fill out the weekly market worksheets, maybe do a trade occasionally when you get a, quote, hot tip and wonder why you never get good at this, I'll tell you why. Because you're not applying yourself. 10 minutes a day, that's all we ask, and we've already burned up probably 3 minutes. But again, I do hear from you guys that so much of what I talk about at the beginning of the program are some of the most important kernels that you get, and I'm happy to do that. Okay, let's jump in. What do we see going on with the S&P 500 on the weekly chart? Up for the day nicely, 0.95%. I mean, again, since our weekly vertical crossover going up back on the 29th of September, the S&P 500 has gone from somewhere around the jumping in point at 250 to closing, well, the high through the day, 180, $30 in 3 months. Is that not beautiful? October, November, December, we're into January, say 3.5 months. Is that not gorgeous? Again, it's going to stop at some point, but until it does, ride that wave, baby. Looking sweet. Derivative oscillator hiking up, the price percent oscillator continuing to move up nicely. Again, 2 days into the 4-day week so far, things are looking good. What's going on the 2-day chart? Again, it had lost some of its energy, but then it popped back up again on the price percent oscillator. Derivative oscillator is pretty much sliding sideways. Again, price moving up decently. We have basically 4 candles connected on the trend line, which is beautiful. Price movement well above the weekly and the 2-day. And as we go to the 4-hour chart, what do we see? Well, things had gone flat, and the morning didn't have too much to show for it on Wednesday, but the afternoon, beautiful. It actually pulled back some, but again, nice movement well above the 2-day trend line. Price percent oscillator moving up. Derivative oscillators in the negative. That's because things slid sideways at the end of the day on Tuesday and the morning on Wednesday. So again, keep your eye on the derivative oscillator. Remember, all reversals start on the 4-hour chart. We've had a couple of pullbacks. We had one on the 10th and the morning of the 11th, and of course the latest one on the 16th, the morning of the 17th. So keep your eye. At some point, it will stop going up. What goes up must come down. But so far, so good. What's going on the Qs? That's the Nasdaq 100. Again, the S&P 500 is represented by SPY. That was the first chart we just looked at. Qs is the second chart we look at every day. And of course, we had a weekly vertical crossover going up on the 5th of January. We had a jumping in point. That was a Friday. The jumping in point on weekly vertical crossovers is always that following Monday. Things were beautiful, somewhere around about 158, 158.50, something like that. And of course, things as high so far as 166.42. Are you kidding me? In 2 weeks? Beautiful. Derivative oscillator gaining energy, price percent oscillator moving up strongly. First 2 days again of that 4-day candle. The weekly chart's typically a 5-day candle, but of course we have a shortened trading week because of the Martin Luther King holiday on Monday. What do we see on the 2-day chart? We see a beautiful trend line price movement just stacking up like stair steps. We now have, 6 candles that are just running along like stair steps. Derivative oscillator looks the same. Price percent oscillator actually kinked over, going up even higher. Just the first day of the latest 2-day candle on that 2-day chart, but it looks beautiful. And as we look at the 4-hour chart, is it giving us any forewarnings? Well, slid sideways, again, like the S&P at the end of the day on Tuesday the 16th and the morning of Wednesday the 18th, but then up in the afternoon. A lot of sideways sliding motion as far as the price percent oscillator goes, but it continues to kick up. When we look over, though, well, we don't have a divergence yet, but again, we also look for divergences. That is where the price percent oscillator moves to even higher highs, but price does not. So again, keep an eye out for that. Whenever that occurs, things cannot be sustained. And again, you'll get more of that if you will listen to Chapter 7 of the book about what happens when you have divergences and how they work for you, whether it's a lower low in price and the price percent oscillator is not going down there, or vice versa. So again, you want to watch for those kind of divergences. They will give you some heads up. What do we see going on as price went up a little higher over the last day? We can see that things had peaked out. Let's see, how did they get on Tuesday? Up to 166.42 and up to 166.04. So again, we're really retracing what we had lost on the afternoon of the 16th and the morning of the 18th. So again, keep your eye on things. Derivative oscillators lost energy. Price percent oscillator is gaining energy, pulling away from the red signal line. But just again, watch at some point, like we said, these indexes are going to pull back. So be aware. In the meantime, ride those babies. Ride them till they can't be ridden any longer. Okay, let's move on to TLT. Remember, we had a weekly vertical crossover going down back on the week ending the 5th of January. Had a down week in the prior week ending the 12th of January. So far, we've got a bit of an up week, although it was a down day, not a big down day on Wednesday, down 0.14%. But again, we see the price percent oscillator still heading down, derivative oscillator gaining downward momentum again. That looks good for the weekly vertical crossover going down. Look at the 2-day chart. We can see that we actually are going into the second day of the third day actually of up candles. Derivative oscillator still in the negative, although losing some downward momentum. Price percent oscillator not flat, actually going down at a steeper angle because of the down day as far as price went on TLT for the day on Wednesday. Now, be aware, we are using Heikin-Ashi candlesticks. They are unlike your typical open high, close low candlestick that many of you may be used to. Great training at the website on Heikin-Ashi candlesticks and how to use them. They show you the average pace, which on the 2-day chart is increasing. Derivative oscillator shows that. Price percent oscillator, again, is still heading down. So, you know, again, some concerns about where TLT is actually going. We look at the 4-hour chart. What do we see? Well, we can see that up in the morning and then flat in the afternoon, a doji, which means indecision. Derivative oscillators continuing to gain energy. Price percent oscillators moving up, but not at the same power. So we'll see if things are going to flatten out here. And again, reaching a peak somewhere about 125.19 or so, maybe going flat and rolling back over. Now that would give you a good jumping in opportunity if we see that 4-hour chart roll over and go down based upon the 2-day chart being down and the weekly chart being in confirmed down moves. So just watch, see this as a pullback potentially, and if the things roll over, when the rollover occurs and you have a crossover going down, as we saw back on the 5th, that's what it looks like, then that would be your jumping in point when that candle closes and the next candle opens. So again, you might have that opportunity before the week is out. Lastly, we'll go to gold. Gold down 0.81%. Now we look at the weekly chart, still up, not up at the same angle on the price percent oscillator, but derivative oscillator going up strong, weekly chart going up. We have going into our 5th candle, 5th week of up movement. On the weekly chart, look at the 2-day. What do we see? Well, we can see it leveling off a little bit. The first day of the latest 2-day candle, red spinning open top. So again, derivative oscillator losing energy, price percent oscillator going about flat. So keep your eye on that. Price movement still above the 2-day, still above the weekly. But let's look at that 4-hour chart. Again, we had a topping out starting somewhere in the afternoon on the 12th. On Friday, things sort of topped out and started sliding over. It crossed over going up, but did not hold that. We don't like to see where we start getting sloppy on our 4-hour chart on gold. It got sloppy, if you recall, back in mid-November. And it just got sloppy again with the crossover going up and then immediate crossover going down. Now, typically, when it does that, it doesn't usually turn around and do that over and over. Usually, if it does make a false pop-up and rotates back over, it's going to take that baby down. So keep an eye on things. That crossover did occur on the afternoon on Wednesday, so you may have a jumping in point. Check out what gold looks like in the morning on Thursday. If you want to trade on that 4-hour chart, again, you're going against the weekly and the 2-day, but a 4-hour chart here in gold has a mind of its own. As you know, it can be a total trading chart and has worked for us time and time again as a beautiful total trading chart. It does whack out on us occasionally, but over and over and over and over again, we've seen it be a beautiful chart. So that may be what's setting up. If you want to go ahead and do a practice trade in the morning around 10:30, see how gold looks. If it's still going down at that point, might give you a good optimum jumping in point. Folks, that's where we are at the end of the day on Wednesday as we go into Thursday, the 18th of January. I sure hope that you will listen to our newest chapter in the book, Chapter 7, on the price percent oscillator. A lot of good training there. We'd appreciate your comments as we write the book. Any suggestions you have, things you heard that didn't make sense, that didn't sound right, please help us out. We appreciate your editing skills as we continue to put this together. And of course, we appreciate you. If you're not already signed up and receiving our newsletter, you of course will not get this chapter. How do you make sure you get everything good we have to hand out for free? Well, that is to go to chartingwealth.com and sign up. Subscribe. It will not cost you anything, and we will be sharing with you all the good stuff that we are putting out. We also, as you know, have our new paid trainings coming out soon. We'll keep you posted on those things. But again, practice, practice, practice what we teach on a daily basis. It is what you need, and it will deliver. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.